Hello everybody. So another ugly day in the market, especially for hyper growth stocks, for people who are individual stock pickers and who pick, growthier stocks than the average, growthier stocks than the market. Anyways, if we just look at the market, this is another catastrophic day for the Nasdaq, down nearly 2%. We're almost 3 days like this in a row, so we haven't had a good week. And Bitcoin is still left for dead at 100,800 as I record this. And of course, CNBC, the market tries to figure out, why are we down? Like some people say it's the jobs. Some people say it's AI valuation fears. I kind of debunked that in my prior video, AI valuation fears. Like I don't understand how NVIDIA dropped so much. To me, NVIDIA is the most undervalued Max 7 stock right now. It's quite undervalued if you ask me. So I don't get it. I think what is spooking the market is the liquidity problem of paychecks not going out, of the government not spending, and the government sitting on, by some estimates, maybe $1 trillion of cash that have not been spent in the past, 38 or 39 days, whatever this is. And concerning enough is that if you go on Polymarket, for a change, KULR has the same thing. Polymarket is thinking, most people are thinking that we won't even reopen within the next 10 days. It's going to last more than November 16th, right? So is it? I mean, because it's gonna worsen. So is it gonna last until Thanksgiving? Do they want to make something with Thanksgiving where people can't get on flights because they're gonna have to cancel even more flights? They already canceled 10% of the routes in the U.S. because of the air control shutdown. It's a mess, and it seems like there's no end in sight to this shutdown, longest in history. So pretty impressive stat right here. And the rate cut prediction, there was a Fed governor who spoke, who said they don't know if we can do a rate cut, but if you look at the CME Fed Watch tool, we're still due for a rate cut in December. The shutdown is the one thing we need for liquidity to come back in the market and for growth stocks to react, normally as they should right now in this month, right? In this season, this is a good season for stocks usually, and it's a mess. And the earnings have been good. I'll talk about some earnings in a bit. The earnings have been fairly good if you ask me. So anyways, let's begin with strategy. Of course, I cover strategy a lot on this channel. I want to point out that he's likely ATMing right now. So first of all, strategy today, the common, awful, really bad, down 7%. Bitcoin was only down 3%, so we way underperformed Bitcoin. MNAV is still compressing. MNAV at 128 per the strategy dashboard. That's an all-time low this time. That's an all-time low. So common doing really, really bad. Now, on the flip side of a coin, on the other side of a coin, there's an advantage here. We've been ATMing on stretch likely all day. So if you can see the $100 mark, we've hit 1, 2, 3, 4, 5, 6. Yeah, 7 and 7. 7 times. We've bounced against the $100 mark 7 times and then went back down. And so I have to assume that every time we've bounced at 100, he prints the ATM. He prints stretch. That's what I have to assume. And of course, looking at the price action in after hours, we move to 110 cents in after hours. Why? Because he can't really ATM in after hours anymore. So this is a great pattern. I think we got to get used to this pattern. But to me, that was a big ATMing day for CELH, and I can't wait to see on Monday how much he buys. So the common awful, but under the hood, in my view, the stock is performing really well. Okay, let's talk about e.l.f. e.l.f. was a stock I had gotten into when it fell into the 50s at the beginning of the year. You may remember in February. I sold out of it, and the question is, are we gonna find that e.l.f. is interesting again? That's the question. e.l.f. was down minus 37% at one point today, and I honestly, here's what I say about the makeup stocks: is e.l.f. is a great stock, but I prefer Oddity. So on this channel, I've talked about Oddity so many times. I prefer Oddity because Oddity is 100% direct to consumer. It's 100% sold online. Their makeup is 100% sold online, 100% direct to consumer, 100% social media, and they make the product, I believe, in like Eastern Europe and Italy, so they don't have the China tariff issue. e.l.f., of course, is hurting because a lot of their makeup is made in China, something like 80%, and they have the issue of tariffs. Therefore, that's hurting them a little bit. And then analysts, kind of complaining that the full year revenue is going to be 1.57 billion compared to 1.65 billion. So yeah, okay, revenue is a little lower. But on the other hand, Rode, which is a new brand that they acquired in last May, is growing 40% year over year and is the fastest growing part of the business. So yeah, okay, e.l.f., maybe a so-so quarter, but that's the point. That's not worth minus 37%. Like the market is broken. Like give me a minus 10% after a quarter like this. Don't give me a minus 37%. What is going on? What is going on? It's like I mean we have a drop in revenue by single digit. Compared to what was expected, and boom, you get punished 37%. So we're going back to like the worst time of quantitative tightening of 2022. Like stocks are behaving, stocks are reacting like summer of 2022, when you remember Powell that was spooking the market with the most downbeat speeches and the most egregious rate hikes. And so I don't understand why the stock reacts like this. The market is really depressed and really doesn't want growth. Yeah, the quarter is a little disappointing. They came a little below, but is this really worth down 37% in one day? That's kind of scary if you ask me. So anyways, let's talk about another stock, LifeMD. Why is LifeMD dropping nearly 7% at one point today? Like I have no idea. This is ridiculous. LifeMD got even cheaper from yesterday. So this morning I made a video on LifeMD trading at 0.037. It's now trading at 0.034. At this rate, give me another day of drop like this, we're going to be in the 0.02s on EV over GP over RG. And why is it falling like that? I mean, okay, Trump made a speech about GLP-1s, but if you actually look closely to the speech, you can see that it's the 149, like the headline number, that's a TBD, to be determined, and it's for some form of a microdose. So it's got a lot of headline value, but if you look under the hood, as many people pointed out with HIMS on X, if you look under the hood, telehealth is still going to be much cheaper. And you know what? Even if Trump RX was cheaper than either LifeMD or HIMS, it still wouldn't include the doctor visit. And that's what people never understand about this. So LifeMD, much closer to the Netflix of doctors. What does LifeMD do? They just launch their own pharmacy, right? So they're going to fulfill their medication. They launch their pharmacy. They have labs. They have a partnership with LabCorp where you can go get a lab. And it's $19 a month and you can see a doctor. Like it's $19 a month for a doctor subscription. So for an on-demand doctor subscription, you can see a doctor for $19 a month. That's the Netflix of doctors, right? So LifeMD to me is a very compelling offering. It's a mini HIMS. It's a baby HIMS. It's a company that is 10 times smaller than HIMS. But the growth is going to be good now that they don't have WorkSimpli anymore. WorkSimpli was a PDF app. They sold it. It was a PDF conversion, PDF signing app that they sold. Good. It's going to be a better story. Now the top line growth for LifeMD is 32%. So growing slightly slower than HIMS, much smaller than HIMS, about 10 times smaller than HIMS, but also about 4 to 5 times cheaper. 4 to 5 times cheaper than HIMS. Look at this. I mean, you have a business with a nice EBITDA margin that's achieving leverage. That margin is increasing. Outstanding gross margin. And it's trading at 0.73 times revenue. It's trading at 12 times EBITDA. Right, so to me, it's tough to understand. Now, some people have told me, "Oh, the market is maybe spooked because of the delay for their earnings." The delay for earnings it has got like something to do with a minor accounting change, like a minor accounting change that could lead to 4.6 million, which this is a company that makes 209 million in revenue, right, over the trailing 12 months, right, and they say 4.6 million, but here's the catch: it's a 4.6 million adjustment for 2023, 2024, and until June 2025. So it's essentially nothing. It's 1%. It's 1% of a cumulative revenue over a period, right? It's essentially nothing. And they say it's not going to be materially impactful. It's not going to impact the cash flow or the cash position of the firm. But of course, this triggers headline and the stock sells off. So that could be that reason. I don't know. LifeMD, I find way too cheap. Let me move on to another stock that I like very much on this channel, and it is Celsius. So let us talk about Celsius. So Celsius, another epic drop, I guess is the only way to say it, down 28%, and this one I really don't understand why it's down so much. To me, this stock is firing on all cylinder. Alani Nu, their acquisition, they joined them 2 quarters ago. Alani Nu doubling revenue, up 99%. Okay, the main brand of Celsius is still growing 13% year over year. But we don't really know. It's likely growing much more. You have to look at it at the channel level, not at the shipment level, because there's a discrepancy between 44% revenue growth at the Celsius level and 13% at the channel level. And this has to do with inventories and retailers stock up. So retailers stock up and then they sell the inventory, and they stock up and they sell the inventory. So it's tough to know exactly the revenue, and that's why it's a better way to look at the channel, the sales across the retail channel. And you can see the direction of the sales of a portfolio for Celsius reported by third-party channels, and that's nothing but up. And that's a beautiful 30 to 35% growth, unabated, unchanged, always with a little stock issue between Q3 and Q1. Always, you can see that everywhere. But that company over the long run is only going one direction, and it's going up, and it's going up. And if you look at their market share, you can see Red Bull and Monster are about the same size, and then Celsius is the challenger, and now they own Alani, they own Celsius, they own Rockstar. Okay, Rockstar, I'm not really going to analyze that. I don't know how they ended up acquiring Rockstar. I mean, it's only $2 million, like it's not that big of a deal. But sure, they have Rockstar too, I guess, I suppose. I don't really know how that fits with their brand. That's a little odd. But Celsius, the non-gendered energy drink, unlike Red Bull and Monster, who has very extreme marketing, very masculine marketing. Red Bull, the neutral marketing, and Alani, something like 90% plus women who drink Alani. It's 90% of buyers of Alani are women. It's the female-targeted energy drink that they got, and growing very fast. They acquired their main competitor. You see, when I was so excited when Celsius acquired Alani, because Alani was tracking them pretty closely, right? Alani was right behind them. And when they acquired Alani, which to me was a no-brainer. When that happened, I was so happy. But you know how the market is. Acquisition's bad. So the market sold it off. And this is a company, I'll point your attention to the EBITDA margin, 28%. If you look at the most recent report, that EBITDA margin is 28%. This thing is so profitable. Selling these beverages, you sell this for $2, and you have such a big margin despite the heavy cost of distribution and all that sort of stuff. So the minus 28%, I tried to see on X, and I could see the reason why it dropped is because they did mention on the call that they recorded a $246 million termination cost for the Alani takeover when they took over Alani. And you probably know how this works. The headlines, as always, the algos, it's going to be a cost. When you go down to the detail, you see that cost is being funded by Pepsi. It's Pepsi who's paying that. It's not Celsius. But can we trust Mr. Market to discern when they say, it's actually Pepsi funding, it's a neutral cash position? Probably not, because probably Mr. Market is like, it's so expensive, and Mr. Market just looks at the short term. So this stock is cheap. This stock is cheap, and it got much cheaper today. And so, there's a liquidity problem in this market, because this is not a bad report, and it dropped 28%. That's ridiculous. There's a liquidity problem. Money is not sticking to growth stocks, and so it's an opportunity for those who have dry powder. Moving on to Tesla, of course, after I record this, I'm going to be watching the shareholder meeting. It's going on right now. And the media is acting surprised that Elon Musk got the $1 trillion pay package. But if you looked at the prediction market, they had something like a 93 or 94%. Tesla spiked as soon as this was announced, and then it just did a Tesla and went back down a little bit. So Tesla, perhaps less impacted by changes in liquidity, given of its size, right? Given it's a $1.3 trillion company. I will call your attention. And I haven't seen those entirely. I've just seen clips on YouTube, but they seem to have done a lot of improvements on Optimus. He seems very much human-like, pretty impressive. And it seems like they rolled out self-driving cars for cars that are manufactured that drive themselves in the parking lot. They had that in Berlin. It seems like they rolled out in Austin as well, and people waiting in line were excited to see that whenever a car is manufactured, it goes park itself. I knew they had this in Berlin. I didn't know they had it in Austin. I guess they have it in Austin now, or they just launched that, or they're just showing off. That could be it. That's kind of the theme of these calls. Anyways, I am more confident in Tesla than ever. And the last stock that I will cover today, I haven't covered it in a little bit, it's KULR. I am shocked by KULR's valuation. At $3, at $3, I honestly don't understand it, because the market is essentially telling you that the business of KULR is only worth about $10 million at this point, because 90% of the value of KULR is accounted for by the $103 million of Bitcoin that they own on the balance sheet. And keep in mind, $103 million with Bitcoin being so cheap right now. Bitcoin is so cheap right now, and they have $103 million worth of Bitcoin. So I'm supposed to believe that this delta is correct, and that KULR, the business of KULR, is only worth $10 million. That's not even the price for the average company to go public. I mean, this company is at $3. It went public at 10. If you go back to 2023, it was trading at $3 in 2023. They were nowhere near adding Bitcoin on balance sheet at that point. When they are essentially trading at the same level they traded before they started acquiring Bitcoin and raising funds at a very favorable MNAV to acquire Bitcoin. And I cannot understand this. And KULR is one of these rare companies that when I put it in my spreadsheet, I get a number. They're predicting 100% growth. And if you look at the products, they have products that are compelling: space batteries, thermal solution, thermal runaway batteries. It's a compelling product. It's at the intersection of space and battery tech. They just launched a robotics product. Excited to see whether that's picking up or not. And yeah, they're losing a little bit of money. Yeah, sure, but there's a lot of money-losing companies right now that are getting more respect. I guess if you look at Enfrius valuation, it's getting much more respect. KULR is getting no respect, and I think this is an anomaly of the markets, because to me this company is just too cheap. At this point, you're essentially getting the company for free at this point, because if you buy it for a Bitcoin, stay for space, it's essentially better. So I don't understand it. There's clear anomalies. The market is totally inefficient. The market wants nothing to do with growth stories right now, and that's why we have these opportunities. And it is so annoying, and it's just annoying. The blood continues. Hopefully the things get better towards the end of November. Hopefully, people go on holiday, Thanksgiving, and maybe things get better. Hopefully. We'll see. Anyways, this was not investment advice. This is not financial advice. This is only entertainment. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.